Hi everybody, this is Martin here. We at iVSAChart would like to welcome you back to our annual Market Conference and Investment Outlook for 2018, featuring speakers with years of experience in their industry to share their opinions and insight in the market with you. So I hope to see you in our March 25th, 2018 workshop, and click below for more information. I'll see you there soon. Hi everybody, this is Martin Wong here, founder of iVSAChart, and coming with you another market outlook, 9th of February 2018. As usual, we have our disclaimer. Just take a minute to go through it. Be familiar that a lot of material that we present here are for educational purposes. Now, the headline that really hugs around the whole global financial system of the stock market or stock exchange, whatever we call it, is the global sell-off. We are no difference where we see it in US, we see it in Europe, we see it in Hong Kong, Japan, Singapore, Thailand, Indonesia. All over the world, we're going through this carnage of a sell-off. Now, the key point here is the minus 10% that we see. I've been getting a lot of calls and a lot of concern from our members. Should I sell the stock? Should I cut loss? Again, my advice to you, follow your trading plan. If you're trading for the very short term and you're buying a lot of stocks that don't have fundamental, cut, stay alive. Now, those of you who actually look at quality stocks like I do, and this is a time where you want to think, hey, maybe I want to be buying, and that's where you want to use iVSA for looking for sign of strength, for those things that we always talk about in our workshop, the two-bar reversal, the tests, the springs, those things that you want to keep in mind. But again, coming back to the headline that we see in here, the global sell-off, the minus 10%. Now everyone is talking, are we sliding into a recession? And the key point I will talk about also in our webinar for our members is the US 10-year government bonds, which really topping around the 2.9%. And everyone is talking about the 3%, where is the likelihood where the market will go to corrections. Now remember, higher interest rate mean the US need to service more debt. Now more debt will likely to slide to a possible recession, and that's what is correcting. Now also, at the same time, the many members who are watching this and some of the public have not seen a huge market drop that we've been seeing, almost a 1,000 point drop over two occasion this week. So that's also another concern in here. When big market go up, they're all happy. When the market come down, this is where a lot of the fear. But then again, this is where astute investor, the more experienced one like myself, been doing this for the last 15 years, I'm looking to buy good quality stocks. All right, good quality stocks in here. So again, next slide I'll talk about. So the headlines you're seeing, we saw the 4% drop last night. And also there's a sell off across all sectors and board. Bitcoin continued to sell off, hitting low of 6,000 before rebounding back to around 8,000 level in here. So, but good news is regulations are coming in from cryptocurrency. So once that's done, prices are likely to be stable. Now also the KLSE, the Hong Kong index, the STI all follow has a red diamond. Now this is a very interesting chart. We talk about the 5 major corrections since 2019 that we have. Now remember, 2009 is the aftermath of the global financial crisis, and when it started was March 2009. I still remember when I was telling a lot of my so-called clients as well, some of the reminders that I've been coaching them, this is the time you want to be buying, 2009. So you can see the market continued to move up, straight up. And along the way, we have a 19%, 16%, 12%, 13%, and right now, 10.1%. Now the question is, can this go beyond 10%, way up to 15%? Now it cannot go above 20%, yeah? Just remember, 20% is the limit. Anything go beyond the 20% means we're going to be sliding into a recession. Now, do you feel that we're going to a recession? That's a question you need to ask yourself. If you ask me, definitely not. We are still in a nice boom in here. So this correction is a good opportunity to buy. So this is actually a way to look at things from way out, taking a perspective rather than being jumping in here. All right, now you can see the US Dow Jones in here. We have the red diamond just appears up here last week. This is the red diamond came off, and this is the part where we are selling. We do have a two-bar reversal followed by another a red down. So the question is, can this go down to here, which could be somewhere around 14 to 15% what we call a corrections. Now that's going to be ugly, right? And also we did talk about to our members a lot of time, this market, the market goes up like this, goes up like this. So the period, where it actually takes out this area here, assuming this is here, this thing could be in somewhere in between 90 days. All right. So look into that kind of period when the market about 3 months recovery. So by the time it gets to 3 months, which is going to be May, then the next question a lot of members will do ask me, sell in May and go away, because May typically are bad times for the year. But again, you always look in perspective. You look at the 35 years or even look at the 20 years cycle of S&P and US Dow Jones, right? If the beginning first half of the year, the first quarter, you have a very bad year, or right now it's saying, then sell in May and go away might not just work, because the market has bottomed up right in the first quarter 2018, then we should pick up. But don't forget, we also have the general election 14, so make sure you get into our website to find out more about general election stock play. To visit our website ge14.ivsa.chart, where I'll talk more about that one. But this is the Dow Jones, and Nasdaq is no different. We have the minor diamond much earlier here. Of course, people who is trading the short term, who pick up the red diamond, would have avoided this massive kind of sell-off that you have. And now again, just bear in mind in here, we are seeing this red diamond here. This red diamond continue to come up, so just take note of that. Now, okay, let's see. Right now, we have the red diamond appeared also this week too in here. Now, just take note, we haven't seen the stage 4. Will we get the stage 4 like what we see in US Dow Jones? Check us out in the coming weeks and you will know, or get a copy of iVSAchart. Now also Straits Time, no different. You can see Straits Time is already banking into the red zone, the stage 4 markdown. The red diamond was here again somewhere end of January. Now remember, we got in on the first week of January, we got out. So it's fairly a good timing mechanism, just like a indicator, a signal indicator when you see in traffic lights or you see in railway station about that. Mid-cap stock also doing the same thing in the SGX market. We have the red diamond selling off here. Hang Seng, no different, as you said before, all over the world is selling, and that's what. Now let's look at the top leader and loser. We don't have too many, but definitely we do have one. One is the oil and gas play, which actually had it in the first week of January. Dynamag make about a 28% up, still going up despite bad things. You can still find some potential, well, rather nature in line with the oil and gas, which is actually improving now. All right. Then on the KL side, we have Pensa up about 10%, where the market actually did hit a minor diamond. There was a wash. This was a wash. However, some of you may not exit. And remember, a lot of time when we see red diamond, we tell people to exit partially. And then you got another almost a 20% move. But these are the bearish indicator that actually tells you that the market will sort of correct and give you a chance to take some partial profit. Right? Of course, the market have gone up to 50 cents before. That's another 5 or 6% more. Maybe you can get more than 10%. All right, so that's all we have today for the shorter market outlook. Now next week will be Chinese New Year, so there won't be any market outlook, so take note. For our Chinese friends and those of you celebrating, Happy Chinese Year, 恭喜发财, great ang pao, and those of you who's traveling outstation, do take care and enjoy your long week. So I'll be back with you after Chinese New Year with our market outlook. Hopefully by that time you'll see some sort of stabilization in the market outlook, and then it's not really time yet. The market's going to go back up. Now remember, big market outlook is just like someone who just jumped off 10th floor. If you jump off of 10th floor, even you are Superman, right? You still have to take some time before you get back up and run. Same thing with the market. Keep that in mind. That's Martin signing off. Bye.